and this is a day trading system that I used throughout 2024. It was what I mended to make me profitable. So it's going to be a quick video. I'm going to get straight into it. So what do we see here? We see the last winning trade I took in 2024, part of my day trading system. And there's 4 key parts to the system, and I'm going to talk through each of those pretty much very simply. But what do you see here? We're going to explain what is actually going on here. So this is on the 5-minute chart, but I do look at the daily, 4-hour, weekly. Wait, what? I look at the weekly, daily, 4-hour, 1 hour for high time frame bias, and then I look at the 5 and 15 to actually trade. So I always mark out the Asian session, the London session, and New York session because I trade New York, but London and Asian is a big part of my system and what has happened there. So as you can see, the sessions are marked out here. Then price came down, took liquidity, created a 5-minute break structure, boom, trader on to win. People are going to say, why is your RR like that for? And I'm going to say because I have a certain RR, I trade 1-to-1, and it's worked for me and I like it. I'm someone who likes my trades to breathe, and from the year and looking at all of my data, a lot of trades come down a bit and then push up. And if I went off of just liquidity, how everyone else does it, and where to put stop losses based on how everyone else does it, I'd have lost a lot of trades. You gotta be a genius. So the first things first, I find my daily bias. This daily bias I know was bullish. Why do I know that? Because of the 4 time frames, the weekly, daily, 4-hour and 1 hour, I look at the direction of the market and go off the most recent break of structure on the high time frames. And on this day, I think it was 3 out of 4 or 4 out of 4. I don't remember exactly, but it was a bullish bias, and it was a heavy bullish bias, and I was confident in a bullish bias. So the first thing is achieved, a bullish bias. That is what I wanted. That's what I got. The next thing is liquidity. I wanted liquidity sweep before taking a trade every single time. So what do I need? I need to know the Asian and the London low. Because I'm bullish, I'm looking for the Asian or the London low to be taken. Now on this chart, you can see the London low was here, and if it wasn't there, there's these as well. So it's a bunch of equal lows. Then Asian was down here. So my plan was, okay, so in New York session, I want price to come down, take those lows, and then push back up. But this doesn't want to work. I guess I didn't select it. And then push back up, which is pretty much what I got. So we had the lows here, So now we've got the bullish bias. The bullish bias is there. Remember, 3 out of 4 of the 4 time frames, the weekly, daily, 4-hour, 1 hour, has to be bullish based on the most recent break of structure. What's my camera doing that for? And that is luckily what we got on the day. And then we had the liquidity. We have the London low here and the Asian low. And do we get a liquidity sweep? Yes, we do. So this was a funny one, because we had the London price. It rallied up a bit in New York, then came down, took the London low, so that got taken. So we had our liquidity sweep that was in the market. Now we could look for an entry after that on a 5-minute break structure. But price came down and just went right near the Asian low. So it didn't sweep Asian low, but it was very close to it. But it then came back. So we've got the daily bias, we've got the liquidity sweep. Now all I want is a 5-minute break structure, because I had the liquidity taken. We could have taken Asian, but we didn't get it, but it is what it is. So now we had the liquidity sweep. Liquidity sweep was taken, London low was taken, Asian low did not get taken. So what are we looking for next? We're looking for a 5-minute break structure. And where did we see that? Here. So if I grab this yellow break structure line, that little high there, we created the high and then created a low that rallied and took the liquidity there. Then after that was taken, what happened here? We had that break there above the most recent high. So we had a breaker structure. And then luckily price came down a bit and I tapped in right here. And now obviously being in, price pretty much came down. It was just hovering around here for a while. But then we got the big break after that of this area here, pretty much Iconoclast is a swing high. I don't know. So now we've got the daily bias, we've got the London low taken, not Asian low, but we've got a liquidity sweep, we've got a 5-minute break structure. There's not really a fair value gap, so I didn't really care about that. But here, I had a 5-minute invalidated fair value gap, which is an extra confluence. Because usually I look for a high time frame fair value gap. If there's not one of those, I want to see a 5-minute fair value gap respected after the break structure, or I want to see an invalidated fair value gap. And here we see that. So we had this gap here, this bearish fair value gap, but we closed above it on this candle, which confirmed to me, okay, we pretty much want to go. Oh, my phone just fucking gone off. So that confirmed to me we pretty much wanted to carry on going up. So after we got this invalidated fair value gap, I was just relaxing, chilling. And as you can see, we went on to take profit for a 1-to-1 risk reward. Now, like I said earlier, most people, the stop loss would have probably been here below the low. But for me, that's not what I like. Yes, I could have the higher risk reward, even put it there and have a 3. But I like it how I have it, which is a 1-to-1. It gives my trade breathing space. And it's just pretty much what made me profitable. So I'm happy with the system that I use. But that is the system I'll be using through 2025. And hopefully it keeps me consistent and profitable. So what is the system? Let me make this a bit bigger. So it's daily bias. You look for a daily bias. Remember the daily bias, weekly, daily, 4 hour, 1 hour. We're looking for 3 out of 4 minimum to be in one direction, and it has to be off the most recent break of structure. Then a liquidity sweep. Whichever the bias direction is, if it's bullish, we want the sell side liquidity to be taken, and then if we are bearish, we want the buy side liquidity to be taken. Oh, that makes sense. So because we were bullish here, we wanted sell side to be taken. Then after that, 5-minute break of structure, and we can pretty much enter straight off of that. But then we can always use a fair value gap or an invalidated fair value gap or a high time frame fair value gap to be an extra confluence. I usually use high time frame, so before the trade even happens, before the setup happens, I'll have a high time frame fair value gap that I'm using, and that'll confirm to me whether my direction is right. But thanks for watching, and that is how I'll be profitable again. Come on.